Woo. So guys, we're going to be redoing this whole shit again, and what I'm going to be talking about is on what D. Hey, what's this? Move your leg from my listen. From my chair.
Just restart. Restart. I just restart.
No, I'm not restarting. Don't worry. Dealing range. Yeah. So our topic is going to be on dealing range. Nice. You know, with the green color now. Not like I like green. I just like green on the charts. Makes it looks good. You know what I'm saying? I don't even know what I mean, bro. So yeah, dealing range. What is a dealing range? A dealing range is a range that took out a previous high or low in the direction you're expecting markets to head towards. So it's something like this. Yeah. So this high is the dealing range. That's the dealing range, and this low, sorry, that's the dealing range high, and for this it's the dealing range low. High, and then this becomes the dealing, what am I typing? What am I typing? Range low. So yeah, a dealing range is a pattern, I would say, that sweeps a high first and then displaces below in the direction of the market you are expecting price to head towards. Are you with me? So let's say price is bearish as per this market condition now. As per this market condition, say price is bearish, and then let me POI. Say price is bearish. If we come down here and then take out the previous high, the high that took out this previous high becomes the dealing range high, which is the protected high, and then it displaces below this low. This becomes the dealing range low. Now, when dealing with dealing ranges, you don't expect price to take out this dealing range high because it already swept a high. When price takes out the dealing range high, what happens is price has turned bullish. That is for a bearish market. If price should take out this high, let's say what happens was price took out this high from here. This has automatically become bullish. This price action has automatically become bullish, and you're going to see something like this. Price is going to come filling an FVG here, and then continue going higher. But if this high is not taken out, which is not supposed to be taken out, because you are expecting it to get to a sell side liquidity somewhere. That's my sell side. You're expecting it to get to a sell side liquidity somewhere. So you're not expecting, this high is not supposed to get taken out. And when we're also dealing with dealing ranges, you are expected to mark out a PD array that aligns perfectly with the premium that for a bearish market, that aligns with the premium for a bearish market, and then a PD array that aligns with the discounted PD array for a bullish market. I don't know if you're getting what I'm saying. So this is it. So these are two scenarios, the bullish and the bearish POI. So this is for the bearish market, and this is for the bearish market, and this is for the bullish market. This is for the bullish market. So take your time to digest what I've just said. Everything I said here is the same thing that applies to this low. A sweep, displacement below, which is a market structure shift. I think I should just mark everything out. Market structure shift, and then fill into, I think I posted this on my X page and also on the Telegram channel to my community. I gave them the framework, the whole framework of how I trade. This is basically what's happening, but on the higher time frame. You know, price is fractal, so whatever happens on the lower time frame is definitely going to happen in higher time. On the higher time frame is definitely going to happen on the lower time frame. So we just look out for this framework as we come lower from the higher time frame, as we go lower from the higher time frame. So this is basically a sweep, displacement below previous low, market structure shift, and then a retracement into a premium zone. This high is not going to get taken out because it already swept liquidity. Are you with me? Now when we go into let me take a screenshot of this. Save. When we go into the lower time frame, so we're going to be dealing with things like I think we're going to be dealing with things like time and price. Time and price. What else again? FVGs, FVGs, OBs, breaker, blocks, propulsion, blocks, etc. You know, this ICT concept has a lot of names, but yeah, we're going to be dealing with things like this on the lower time frame. You know, we don't trade the higher time frame, so we don't have to, you know, implement all of this. We just have a few that we implement on the higher time frame for our buyers. You know, the higher time frame is for buyers, and this will help you a lot. This dealing range concept will help you a lot with buyers, as we're going to show on this EU chart. Now, based off of what I've explained in this diagram, we can see that on this EU chart, what we're looking at, let's say all of this is taken out. This is a bearish market. This is a bearish market. This was the previous high. This was the previous high. Price took it out. In fact, I think I'll just have to reanalyze everything here. Let me delete. Beautiful, beautiful. So on the weekly, should I delete all of this? I think no, I'm not going to delete. On the weekly time frame, so on the weekly time frame, I'm coming. I think I have to delete this. On the weekly time frame, what we can see is price taking out this high, making it what? Price took out this high, making this high a dealing range high. A dealing range high, and then price displaced. But you know the way the higher time frame works is, because it's the higher time frame, a lot of things are going to take time before they happen, so we can just use the lower time frames to confirm it. I don't know if you get what I mean. So this now is a pullback. This is a pullback, but this would be clearer on the daily time frame. So this is not what we're working with. But you can see that this now is a dealing range, and if you should check, if you should zoom out, you would see that this right here, no, not that, this right here, is the high that was displaced above. Displaced what? Above, making it a market structure shift. Now for this FVG, it already, for this FVG now, price came and fill it. Creating a turtle soup. Now you don't have to get confused. This is the higher time frame analysis. You get what I mean? Now for this higher time frame, when price displaced above this market structure with this impulsive up close candle, which is a bullish candle, it then swept this previous week low, which now becomes a turtle soup. I don't know if you get what I mean. Now this becomes what? A dealing range low for this whole move. For this whole move, this becomes a sweep, and this becomes what? And this becomes a dealing range DRL. I'll save it as DRL, dealing range low. Then this becomes what? The target. You can see how I'm using it to frame bias now. This becomes the target, the buy side liquidity. So when price takes out this low, we're expecting price to then take out this high, because what? It is now a dealing range, and we're not expecting price to take out this dealing range low, because it displaced above, changing the trend, market structure trend. I mean the bearish trend. It broke through the previous high, changing of trend, filled into this FVG, sweeping the previous week low, and then displaced above again. I don't know if you get me. So this is just the dealing range concept. On just you see the dealing range concept works like a pattern. You understand what I mean? It is a pattern when you join so many candles together, and it's still a pattern even when you're just looking at 3 candles. I think it takes 3 candles to form it. It is not necessarily 3, but for this example, these candles in the red box, it is just 3 candles that perfectly explains the dealing range concept. There must be a sweep, and then there must be a target. That's basically it. So this is one way to look for scalps It applies to so many time frames, like different time frames. So yeah, as I was explaining, on a wider view, price is placed above this market structure, creating this high. Now what happens is we take our fib tool, and measure out the 50% premium and discount levels. So this FVG, let me take out this DRLI market. This FVG is below our 50%, so we're expecting price to what? Mitigate. We're expecting price to what? Mitigate. And we can see that as price displaced above, price did not even come back to fill this 50% level. It did not. Now let me teach you a secret, something that happened here. This is where liquidity and structure traders got their own entry from, their own entry type from. When price is coming like this, let's say on a bearish market, and then it does this, this pullback that's happening is going to be into a fair value gap, and then it will displace above a high. Are you with me? It will displace above what? A high. Then it's going to come back again to tap into another block before it continues moving. Let me talk on this a little. So this is a sweep. This becomes what? The dealing range high. This becomes what? The dealing range low. This becomes the dealing range high. But since we now know that price has turned bullish, we are going to be targeting the original consolidation. That means where the move started from. Are we together? Now when this happens, it most times comes into a HTF key level. So price swept liquidity, displaced above, giving us what? A market structure shift. When it gives us a market structure shift, this becomes what? Where this reversal, this retracement rather, is coming into, is into an FVG. The retracement is coming into an FVG, right? And then it is targeting what? Buy side. You're not going to target this high buy side here, the extreme. This is, let me label it as the extreme zone. Extreme buy side liquidity. You're not going to be targeting this yet. With this, let's say you get in on a trade here, you're not going to be targeting this. Say your stop is below, you're not going to be targeting this. You should be targeting the nearest liquidity zone, which is this buy side. The nearest liquidity zone, which is this. Now this other block or an FVG, whichever one is there, let me see, whichever one is there, either a fair value gap or a what? An OB. But for this particular trade, you're not going to be targeting this. It is for this you're now going to target this, because if you look at it, when this takes out this high, it's going to come back to take out this low, creating what? Another dealing range what? Low. Creating what? Another dealing range low. You get, it's going to come down, creating another dealing range low, and then it's going to come down, creating another dealing range low, and those people who greed took over, or they let greed get the best of them, are going to be stopped out on this trade, missing out on a good 1 to 5 hour, let's say 1 to 6 hour, because it's a 5.9. So they're going to miss out on this because they are targeting this. Meanwhile, they don't understand price. So price is going to do this and then get back to this place. Back then, when I started out this January, I was milking this thing as mad on EU. Like God, I was milking this. I would catch 2 trades in a day. I would catch the move because I understood what's going to happen. I would catch this to the nearest buy side liquidity, and then I would catch this to the external range liquidity. You get? So when this happens, you could either, I'm not talking about entry models. I would have taught you another entry model, but I'm not talking about entry models. I'm just talking about dealing ranges. So yeah, this is what you should look out for. Let me take a screenshot of this again. So this is what you should look out for, and that's the secret I said I was going to show you. And if you observe, this is what liquidity and structure traders trade. This thing I just said. For ICT traders, they trade just this one, the FVG. It's not like they trade just this one, because we're still going to catch this move. But I don't want to go into the entry models yet, because for ICT, some of us enter off of this other block, but some of us enter around this side again. Some of us enter around this side again. So I'm not talking about entry models right now, but on the next time I'm going to be talking about entry models. I'm going to speak on this. So yeah, this is basically it. This is what basically it. This is how liquidity and structure traders get their entry. If you understand this thing, you understand you're not going to be stopped out. Majority of the times that you get stopped out. In fact, you're going to scratch that. You tell them, go to hell, get the fuck out of our faces. Let's make profit. What is going on? Yeah, so I've not even explained this thing, and it's already time. I would stop in probably 2 minutes. So yeah, what happened is when we are expecting price now to go below this 50%. If we're expecting price to go below this 50%, the previous low would be what? Our sell side liquidity. Below the 50% would be our sell side liquidity. Are you with me? Yes. The previous low is going to be what? Our sell side liquidity. Hence the reason for this line, this sell side liquidity, I marked out here, and I actually explained it. So that is what we were targeting when this dealing range formed. We expected price to go below. First target was this 50% of the weekly range, and then this was our target. Let me just skip to this. Damn, this thing is falling, and I was going to catch a trade. So yeah, this was where we met the market, like this whole level. This whole level was where we met the market. So for dealing range, this was the previous high that created this low. Yeah, it was the high that created this low, but then it took out this failure to displace. Failure to displace. Failure to displace above previous high. Failure to display what? Above this previous high, creating a wick makes this still valid, makes the sell still valid. Now we displaced below this low, but if I go into it, it's going to, we're going to the 4 hour. But this is it. This is it. This becomes the dealing range after a sweep, and then we go on to the 4 hour. We then identify that this would be the target. This would be what? Our sell side liquidity, our dealing range low. Now look at it. Man, there are so many ICT concepts to explain on this thing. This is a CISD, a change in state of delivery. A change in state of delivery is marked out from the beginning of the candles or the close of the candles. You get, it's not, it doesn't have to be on the week. Your change of structure doesn't have to be on the week when you know the direction of price. Let me save this. CISD. It doesn't have to be here. It doesn't have to be here. This is a market structure shift if it closes below this week. But if it doesn't and then it closes below this, it is a change in state of delivery. So we're still bearish. You get, this is one hand, ICT, upper hand ICT has. So when price failed to displace above this high, it then gave us what? A market structure, a break of market structure. If we should go lower, we would see that this is also a structure, so it's a market structure shift. But I cannot explain everything in one video, so I'm going to be wrapping up soon. So this is a dealing range. This as well is a dealing range. This as well is a dealing range. Why? Because price swept and came down and then did this, created another one and swept and displaced, and it goes on. This as well is a dealing range. For every sweep of liquidity towards what? Where price is headed is the beginning of what? A dealing range. Price is coming down to this place. Oh my god, I missed this sell. So these are dealing ranges. So easy to understand. Just look at your what? Sell side or buy side liquidity and wait for price to sweep below or above them, and tada, you're going to get your dealing range. It's as easy as that. So for the next video, I'm going to explain how we go about trading dealing ranges. We're going to what? Explain, let me caps lock, explain how to go about trading dealing ranges. On the lower time frames, actually, on the lower time frames. So for this, I think I'm just going to make this the title. So this is what we're going to go through next on our next class, how to go about trading dealing ranges on the lower time frames. I think I have to, no, I've told you guys, I just want to get done with this shit. let me get done because the time is already too much. How to go about trading dealing ranges.